Good morning, traders. Chris Buss here with your morning look at markets for Friday, June 25th. It is 6:15 as I'm starting the video. Taking a quick look at futures, we're pretty much flat as a pancake, slightly green across the board. Precious metals, copper, all that stuff is just marginally green. So not a lot going on in futures. Looking at the macro front today, there was news yesterday that the infrastructure bill, there's been a compromise. I did not do a ton of research on it, but from what I understand, it's about $580 billion, hugely scaled down from the grand initial plans of $1.5 trillion, stuff like that. One thing I thought was really interesting and something that really surprised me is there was only $15 billion earmarked for green transformation, and I think I had expected it to be much larger than that. So most of the monies are focused towards traditional infrastructure, roads, bridges, airports, that kind of thing, rail. So that was surprising. Also, all the banks passed their stress test. So I expect a lot of them to be announcing buybacks and dividends and all that kind of stuff. So let's see what happens in the financial sector with the big banks today. We've got personal income at 8:30. We've got University of Michigan consumer sentiment at 10. And last night after the bell, FedEx reported their earnings and had a marginal sell-off of about 4%. From what I understand, concerns on expenses and things like that. Nike, on the other hand, did a moonshot up about 15%, just blew it away across the board and had a great earnings call and also reaction in the stock price. Now on both of those today, as we always say on gaps, if you're comfortable trading the ranges, the opening ranges the day of or the day after an earnings announcement, you can certainly do that. There'll be big gaps centered around both of those stocks. Otherwise, if that's not really your thing, what you can do is set up a bracket trade around the range that develops today, mark the high and the low of the stocks, box that in, and then going forward, you follow price either out of the box to the upside or out of the box to the low side, and those are often really nice trades. We've had quite a number of examples of those this year that have worked out really well. So that's that. What I want to do this morning is something a little bit different. I'm going to go through the daily charts of the indexes, FATMAAN, and then I'm going to look at some Chinese Inrernet names. If you are interested in the shorter time frames, I did a market on close video last night. You can find that on the YouTube channel. It should be the last one on market on close. And what I do there is go through the 2-hour and 30-minute charts of all the indexes in FATMAAN, a lot of trade ideas. So rather than rehash that, I'm going to go through the daily charts today. But by all means, since nothing has changed, those videos, or that video that I did last night, will certainly be valid here this morning. So let's get into it. SPY daily chart, going back to November, we've got a nice rising channel. I've got the midpoint of the channel dropped in. And from the bullish perspective, we're in a rising trend. We've got price above all the moving averages. We've got price still within the channel, at least the way I've drawn it. So from that perspective, it's bullish. If I were to look for negatives, warning signs, I don't like these bearish divergences. You can see here that as we've moved gently higher in price, momentum and RSI have been fading. Now, to me, some people will go off the deep end. A rug pull is imminent. But we've seen time and time again that price will continue to rise and even burn through these bearish divergences if there's a significant push. Now, I think for me, those bearish divergences are yellow flags. You want to be aware of it, but you don't want it to dominate your trading outlook, because price is the final arbiter. And when I use my indicators, they're to help guide or help inform what you're seeing on price, but I always trade off of price. And with price above all the moving averages and within the rising channel, I don't think it's appropriate to try and call a top and try and short this thing, because that's been a losing trade for so long. I used to be one of those guys that took great satisfaction in calling that top and then watching the rug get pulled while everybody else is long. That's great and it does feel good, but you lose a lot of money while you're trying to do that too, because you're wrong so often. So don't be a guy that's trying to continually short these tops. Wait till you get a signal. What would be that signal? Well, your first warning sign is dropping out of the channel. Your second warning sign is price dropping below the 8 and 20 day. That's always a warning signal. And if you're long and you lose the 20, that's a time to set aside, step aside, get defensive. Doesn't mean you got to go gonzo short, but you don't want to be long if price is rolling over, dropping out of bullish channels and dropping below the 20, because then what you're looking at is most likely a test of the 50 down here at 415, and then you could come all the way back to 405 on that type of a move. And even then, here at 405, things wouldn't be massively bearish. Why? Because you're just back to a support level where that could hold, and we saw that here. We've seen the 50-day hold a lot. Any break of 405, you got to get short, because then you're going to go and most likely tag the 200. But other than that, I think we got to stay bullish, stay constructive, see what happens, watch price, and see where that takes us. Here's the cues. Same kind of deal. Nice rising trend. I've got the midpoint of the channel dropped in. We've recently broken out from the prior high at 342.50. And so now we're at all-time highs. We're above the 8, 20, 50 day, which are all rising. Price is walking up the 8 EMA, which is bullish. So now we got to see where we go from here. Can we get a push above this midpoint line, get that as support, and then make a run for the top of the channel? The other alternative is, do we pull back? Do we come back for a back test of the breakout at 342.50? That kind of move, like I've said before, happens all the time. Breakout, back test, go. The other alternative is, of course, we come back to 342.50 and revisit the bottom of the channel. So for me, we can tactically trade, the 2 hour, the 30-minute, or whatever shorter time frames we want to trade. For instance, if we get rejected and we start coming back, we can tactically take a short and see if we get a move back to 342.50, or if that breaks, get short and see if we drop into the 335 area. But then when we get to the bottom of the channel at the 50-day down here at 335, I think the objective trade is to be long against the bottom of this channel. So Warning flags, again, we've got some bearish divergence. We're here at all-time highs, but you can see momentum isn't. We're below a peak that we had way back here. So bearish divergences persist. It's not that uncommon, but it is something you have to respect. You have to be aware of their presence. And so that is always something in the back of your mind that you've got to register and be aware of. Looking at IWM, it looks totally different than the other charts. Why? Because we have been in a $23 wide consolidation range ever since February, and you could even take it a notch back and say to the beginning of the year when we broke above this 205 level that we made a little move, and then we've been digesting this big move from before, and now we visited the top and bottom of that range multiple times, and now we're right here at the top, challenging 234, which was the prior high. Now, from our prior technical studies that if you were to break out of this consolidation range, you would set up a technical target that's $23 higher than the breakout. So 23 on top of 34 is what, 257? Something like that. So that would be a longer term technical target based on this wide consolidation range. Another way to think of it is, is this just a massive top? Could be. We get rejected at 234, come down to the bottom of the box at 211, and then break that to the downside. The same kind of idea applies. You'd subtract 23 from 211, and that would be your technical target to the downside. But once you've run up, consolidated at the top, and then break that consolidation to the downside, and you can easily see that a $23 downside move would take you way below the 200, and then price would be below the 200 EMA, and that puts it in bearish territory. So time for IWM to get off the dime here and break out. So really important level here. Other positives here short term is we're above all the moving averages that you see. Those should be support as it tries to emerge from 234 and break out. Again, bearish divergences. We were at a high momentum level back here at much lower prices, and now we've consolidated and we're at the highs, but at much lower momentum and RSI levels. So those bearish divergences persist here in IWM as well. I don't think it's as massively important as it is on SPY and QQQ. Why? When you're in consolidation mode, momentum is going to bleed off because price is going nowhere. And so that is momentum coming out of the system. And that can be a hugely positive thing. Why? Because when you're at a high level, it's almost impossible to keep that momentum going. And then that's what the consolidation is for, to reset momentum at a lower level. And then you get the breakout, and then this can go higher. So that's that. Facebook. And here we see that. Let's look. Long consolidation, momentum doing nothing, you break out, and then you get a surge, and then you get a momentum run. Here we've got Facebook breaking out, moving higher within this channel. We just broke out of a baby consolidation here above 338, and so now we see how far that can take us. Can we get up to the midpoint of the channel? Do we come back for a touch and then go, or do we lose this 338 level, drop out of the channel, lose the 8 and 20 day, and then come down here to the 50 down at 320. So it's important for Facebook to hold the breakout, definitely to hold the channel to keep this on an upward trajectory. We've got negative divergence here as well. We're at new highs, but we're at lows on momentum. On the positive note, RSI is still within its bullish regime, above 50. So that's a positive. Looking at Apple, we went over this pretty carefully last night. We had this support line that we had been working off of. We identified the confluence of all the EMAs at 128 on the shorter time frames. We got that breakout. We had it the whole way. Now we're up here at this 134.50, 135 area where price had muscle memory at that level, did not like it yesterday. So in order to keep this thing rolling, price has got to pop this level, and then we would have an open path to 138. That would be an important level to take out. And then if we can get above 138, I would venture to say you almost got 144 in the bag. You know, come up and at least retag the prior high and then take things from there. Would we break out to all-time highs, or would that put in some type of a double top where it rolled over? So here it is. Stay in the trade if you're long. You can certainly ratchet up your stops if you like. If you're on a longer time frame, stay long, see if we can get the breakout, see if you can get a move above 138, and then you're going to be in the driver's seat. But from a technical standpoint, we're still looking good above all the moving averages, and you can see that price is just walking up the 80 MA, and even if it pulled back to 132, you're still going to have that moving average support below. So I still like Apple. And then Tesla we discussed last night, but for anybody that's new to the channel, welcome. We talked about Tesla making this big 2 or 3 day move from around 620 up to 680. We pointed out that on the daily time frame, the move could be just starting. Why? Because we had a big downtrend line off of the all-time highs, came down, and we just popped that yesterday. So as long as price holds this downtrend line, the bulls are in control. You've got the moving averages below acting as support and starting to curl up. So if you want to be, or if you are a daily time frame trader or position trader, you want to get yourself long Tesla. You've got a tight entry where you could put your stop at 660, somewhere in there. Take $10, $15, $20 of risk for the opportunity to come up here to 760 and tag that level. As long as you can get 3-to-1 or 4-to-1 risk reward ratio, it's worth it. If if you're in common shares, you got all the time in the world. If you're in the option world, you've got to give yourself some time. I wouldn't be trying to do this 2 weeks out on the daily time frame. This is a moment where it's either going to make a bull move up to 760, or it's going to poke its head above and then roll over. But on the positive side, we're breaking above the zero line on PPO, and we've just broken above 50 and heading higher on RSI. So I think Tesla looks really nice here, and hopefully the contingent that really likes Tesla keeps piling in and keeps the momentum going. Microsoft, very much like some of the other names, spent a lot of time in a consolidation range, finally broke out, and has established this upward channel. I've dropped in a midpoint line. We've broken out to all-time highs above 262. We're above the midpoint line of the channel. That's everything you want to see. You've got PPO bottoming out and bottoming out at the bottom of the channel, now rising, breaking above zero. You've got strong RSI rising above 50. Looks great on the daily time frame. And if you're a daily time frame or position trader, you want to stay long against the prior all-time high at 262 and see if we can get a push to this 280 at the top of the channel. That's the technical target. So stay long, look for 280. I will tell you that I was seeing a number of bullish bets in the option market that were looking at, what was it? January of 22, 300s, 300 calls. January, so 6 months out, buying a 300 call, which is, even outside this channel. So there's at least a few guys that are looking out with duration, saying, you know what, with these secular growers, let's take a quick think about it. They've been knocking the cover off the ball. Nothing's going to change that. If the economy slows down, they're still going to grow. If the economy booms, they're going to grow more. So, on the Facebooks and the Apples and the Microsofts and the Googles, they're going to grow no matter what. It's just a matter of, what else is the economy doing? Because we saw them blow the cover off the ball when the economy was shut down, and now with the economy booming, they're going to do even better. So that's at least one example of a guy looking out 6-8 months from now, taking a big swing, $40 out of the money and counting on this thing to go much, much higher. Amazon, we talked about it. Not going to beat this thing to death, but again, for the newcomers, Amazon's been in a $600 wide consolidation range for the better part of a year. Had a bad day yesterday, got rejected here at the top and came back 1.5%. But keep your eye peeled on 35.50. You get a breakout there that holds. Your target is north of 4,000. If you get that breakout, get long, hold on. We should go higher over time, but it's got to do it. Price has to prove it. And I think right here, after yesterday, if you're on the daily time frame, you got to wait. You can't front run this thing at 35.50. You hold your fire. This thing may come back, come back to touch the 20 or even the 50 if things get wobbly out there. So, if you really want to think about it, if you're a bold trader, there's probably people out there that said, you know what, it's failed all these other times, it's going to fail again. And, they got short at this high, and then yesterday they got paid. That is an objective trade. It may not be a trade that you want to take, but from a technical perspective, when you get up to the top of a well-defined range, you can be short against the top of the range and then have price prove you wrong. But in this case, we spent 3 days up here at 3,500 and price couldn't advance. So there may have been traders out there that went short and say, prove to me that you can break out. And if you can, I'll be wrong. I'll take my paper cut and that's it. But it didn't. It pulled back. Google. Nice strong channel. We recently broke out here above 2,400. Prices above all the moving averages. We've got some bearish divergences present like we do on a lot of charts. Stay long against 2400. Stay long against the bottom of the channel. Stay long right here with Google and see if it can't make an advance up to at least the midpoint line, up around 2560, 2570, something like that. And if it can break out above that midpoint line, it's going to go a lot higher. Netflix, another massive consolidation, $90 wide for a year. We've got this double bottom structure that we identified on the charts. We've got this big $35 gap that we identified. This was after earnings. They pulled the rug. Price has been pinned down below 515 ever since mid-April. So we've spent the better part of 2.5 months below, and then just the other day we broke above 515. This is a place where you want to be long against 515 and shoot for this gap fill. We've got PPO starting to break above a downtrend line. We've got RSI breaking above 50 into the bullish regime. This morning I took a little peek. We're up about $6-7 in the pre-market, which is great. I'm long, so stay long against 515 and see if we can grind higher and fill up this $35 gap. I think if you're not in it, it's still a good risk reward. Even here at 520 or so, you've got $5 of risk and you got $30 of upside. So still makes sense to try and be long Netflix. I want to look at semiconductors a little bit. We've been in this $35 consolidation range since the beginning of the year. Now we're up towards the top, looking for the breakout at 258. We're above all the moving averages. We're positive on PPO, looking for a bull cross. That's positive. We're in the positive regime on RSI. That's a green light. We're above all the moving averages. Now we're back up near the highs at 258, where price had trouble before. Handle it the way you do all the other consolidation ranges. If you got long down here, great. If you got long at 240, great. See if you get the breakout. And if you do, that would certainly be a place, if you weren't in, to be long. And if you were in, a place to ratchet up all your stops, all your strikes, and more or less make a fresh start. Take all this money to the bank and then get long. You've got, 35 on top of 260. You'd be looking for something in the 290s if this were to break out and play out for a big leg higher. So there's a lot riding on the line here. Of course, the flip side is comes up here and rejects like it did the other prior times. So real important spot here at 258. So moving on, I want you to keep an eye on Chinese internet, Chinese tech. They've been in the doghouse. I mean, Baba, BIDU, VIPs, all those China names, they've been in the doghouse. Not quite sure why. But back here, this was when Ant Financial, Jack Ma, was going to, dominate the world. Ant Financial was going to be the biggest IPO ever. Everything was all set to go, and he opened his mouth one too many times. China cracked down, killed the IPO, sent Jack Ma to Mongolia for 2 months and nobody saw him. Was he alive? Was he not alive? And that marked the top, and it's been down ever since. But things don't go down forever, and now we've tested a low down here at 205. We came back down for another little test. I've got an intermediate trend line here, and we're approaching the 50. And then we've got the big downtrend line here that comes in about 225 to 220, depending on when it gets there. But we've got a rising PPO and a rising RSI. That's positive divergence. Why? You've got price going down, but you've got momentum going up and you've got RSI going up. So there's some upward pressure beneath the surface, and I think it warrants at least bringing it on the radar screen. And it speaks to, what kind of trader are you? Are you going to wait for this big downtrend line to be taken out so price is above all the moving averages except for the 200? Or are you going to be a guy that tries to catch it down here, play for $10 and then see if you get the breakout? I'm going to wait. I'm going to alarm 225 in my system. And if price can prove it can break out there, then you'd be looking for a move up to 235 at the 200, and then something closer to 250 on an extended move. So something to keep an eye on. BIDU is another one. Might even be a cleaner setup. Why? Well-defined downtrend line, double bottom here at 182.50. Here, low PPO, low RSI, comes in for the second tag, but at much higher momentum and much higher RSI. So there's your double bottom with bullish divergence. And also the moving averages are much more tightly clustered than they are on BABA. And so if you can get a pop above the 200 that also takes out the 50 right here at I've got the 50 EMA at 199, and I've got a little level here at this prior high, say like 201. I would put an alarm there, because if price can take out all the EMAs, get above the 50, take out lateral resistance at 201, I think you got to run up here towards 227, 225, something like that. And then it might be game on with PPO breaking above zero. RSI by that time would be well above 50 in its bullish regime. And then it would be off to the races if 230 could be taken out. So that might be an interesting trade. I think China Inrernet is starting to wake up. And a different way to play would be KWEB. That's the China Inrernet ETF that's got all the names in, C-Trip, all everything, Jinko Solar, all the China names are in that index. Here again, double bottom, bullish divergence, little different posture of the EMAs here. More work to do for it to come up here, take out 72, and then you've got the declining 200 here at 73. But if you're willing to wait and you're willing to take, $3 of risk, what are we at? Maybe $4 of risk back to 66, $3 or $4 of risk, and you're willing to let it grind away, that might be a trade you want to take. Otherwise, I would wait until this double bottom triggers above 72, or even wait for the 200 to be taken out and then play for 78 and higher. So I think it's something to watch. I think of the three that I just presented, BIDU is the most interesting, just based on the technicals and where the EMAs are. So anyways, let's wrap it up here. Hopefully we'll have a strong close to the week. Hopefully Netflix can make some real progress into that gap. We'll have to wait and see. If you're new here and you like the analysis, Please subscribe and hit the alarm bell. You'll get all my content. Jump over to the show notes. You'll see links to the blog site and how to register for all my content. That way you'll get intraday emails on chart setups, trade ideas, observations that I may have. I usually try to send something out at least once or twice a day on just general market observations. And then any other information I have, I'll certainly send it out. You'll also get an invite to our trading room. There you'll find a nice group of knowledgeable traders that are very friendly and generous with their time, helping you answer questions or bounce trade ideas off of. Good group. We'd love to have you there. And of course, longtime listeners, I really appreciate your support. Do me a solid. Hit the like button, leave me a positive comment, pass the link along, help me grow the channel, help us grow our community bigger and better. So thanks a lot. This has been Chris Buss with Traders Profit Compass. Have a good wrap up to your trading week and talk to you next time.